Hello again, fellow BeachBum traders. Thank you for joining us for our video on Beware of Zombie ETFs. So just like there could be zombie companies, there are and can be zombie ETFs. And in this video, we hope to help you understand what a zombie ETF is, how they come about, why there's been a recent rise in zombie ETFs, why you should beware of zombie ETFs, and how to spot a zombie ETF so that you can be aware of them and avoid zombie ETFs. So stick around, and again, we'll help you understand what zombie ETFs are, how they come about, why we've seen a recent rise in zombie ETFs, and how you can spot a zombie ETF so that you can avoid getting trapped into one and therefore beware of zombie ETFs. So stick around, and we hope this all helps. So what is a zombie ETF anyway? Well, we'll start with a definition of a zombie ETF in this article in Investopedia, and I'll leave the link to this article in Investopedia in the description box below so you can reference it and read it in more detail at your leisure. However, you can see they define a zombie ETF as an ETF that is generating little interest from new investors. It's described as a zombie because it's not growing and making money for the asset manager that issued it. When ETFs enter zombie territory, it's usually only a matter of time before they're shut down. In these cases, account holders get their money back. Unfortunately, account holders may make less money than they had hoped and may also get hit with a big tax bill. So again, a couple reasons to beware of zombie ETFs. Why to avoid them is you'll get your money back, but it might be less than you expected, and you might get hit with a big tax bill that you didn't expect. In general, investments held for less than a year are taxed at the payer's ordinary income tax rate, so a short-term capital gains rate, while investments held for over 1 year are taxed at a lower capital gains, the long-term capital gains rate. So the key takeaways from this article from Investopedia is the popularity of ETFs has led to a flood of niche offerings, some which failed to catch on with investors, and therefore a rise in zombie ETFs. So a zombie ETF has stopped growing and taking in new money for the company that issued it. When a zombie ETF is killed off, investors get cashed out. That could mean owing taxes on capital gains. So again, they explain the popularity of ETFs has led to a flood of niche offerings, and we're seeing even more of that with single stock ETFs, etc., to long short single stocks. Some of these may catch on, and others may become zombies. So the ones that fail to catch on with investors are going to turn into zombie ETFs, and they're a symptom of a saturated market. At the time of this article, there were more than 2,000 ETFs in the U.S. In 2019 and nearly 7,000 worldwide. So in general, they're funds to replicate the performance of a specific market index sector. Now we're talking about single stock ETFs. Performance is tied to that index, single sector, commodity, etc. ETFs that enter zombie territory are more likely to close than they are to come back from the dead. So closures can be seen as a good thing for the industry, ridding it of rubbish and helping asset managers learn from their past mistakes. There's no universal guideline on when a zombie ETF will be put down. Some issuers have a generous timeline of a new fund to season, start generating interest, while others are able to make quick calls based on the growth in other offerings. So again, a zombie ETF could get killed off rather quickly, or it could be dead money for some period of time. As a general rule of thumb, if a fund hasn't seen inflows for successive quarters and the trading volume stays low, there's a good chance the issuer is at least thinking about pulling the trigger and killing off the zombie ETF. So they further talk about the rise of ETFs, the increase in the number of ETFs because they're popular with individual investors because they produce results comparable to those of mutual funds at lower fees. ETFs that struggle to attract new money can go into a downward spiral. Liquidity concerns associated with low trading volume can scare investors away. In addition, the cost of administering a fund that isn't attracting new capital erodes the profitability of the issuing company. So again, liquidity, the trading volume of an ETF is one factor that may indicate that it's headed to become a zombie ETF or that it is a zombie ETF. So investors measure the success of an ETF by its return. The company issuing it measures it by its profitability to their business. So some ETFs have been declared zombies and shut down despite making lots of money for their investors because, again, it's not profitable for the issuer, the company that issued it. Another factor that can turn ETFs into zombies is high management fees. The average dead ETF carries an expense ratio of 0.65%. So again, another factor to look out for in identifying potential zombie ETFs or current zombie ETFs is a high expense ratio, comfortably above the industry average. So other ways to spot a zombie ETF, they're no longer a rarity. The SPY has filtered out a lot of market demand, leaving few gaps left to capitalize on. Again, this competitive backdrop are coming up with increasing wacky ideas to stand out from the crowd, increase market share, and broaden their lineup of offerings. This results in a number of hyper-focused ETFs investing in niche areas. They talk about Global X Millennials Thematic ETF, an ETF that focuses on companies relevant to young Americans. And again, we've seen all kinds of thematic ETFs and now even single stock ETFs, and all of these may end up as zombie ETFs. While these funds might have great returns, they're not obvious picks for investors looking to diversify their portfolios. Real issue at hand is whether or not the fund fits a strategic need in enough investors' portfolios. So again, if there's not enough interest, if not enough interest is maintained, that ETF might become a zombie, get liquidated, get shut down. You might get less money out of it than you wish, and you also might get hit with a big tax bill. So again, we'll look at further factors about zombie ETFs, how to spot them, how to avoid them, so you can be aware of zombie ETFs. So here's another good article that was published on mypassiveinvesting.com, and I'll leave the direct link to this article in the description box below that talks about what are zombie ETFs. Again, it was written by Financial Unicorn, published on mypassiveinvesting.com. And again, we'll leave that direct link in the description box below so you can read this in more detail. But you can see here they define zombie ETFs as thematic themed ETFs with the following characteristics: low assets under management. So that's, again, something you can look at for an indication how to spot a zombie ETF or a potential zombie ETF. Low trading volume after the first 2 years of inception. So if it's been around for 2 years and still has low trading volume, another way again to spot and beware of zombie ETFs. Low inflow of money aside from initial seed funds. High risk of getting delisted. So again, if some of these characteristics are true about a given ETF, then it is potentially or already a zombie ETF and will probably get delisted at some point. Essentially, it's a fund that's failed to catch on. So why do they exist? Well, because there's too many new funds offering the same exposure to the same niche market. Market's too saturated with the same thematic ETFs, or just too many ETFs in general. So how big must an ETF be in order not to fail? Well, it depends on fees, other costs, operating costs, etc. Here's one person that was interviewed that says their break-even point for profitability is about 50 million assets under management. So that's one criteria that you could use to avoid potential zombie ETFs. Beware of zombie ETFs is under 50 million assets under management. They give a whole list of examples of past zombie ETFs. Again, I'll let you explore that, but you might see some common characteristics among some of these ETFs. There's a whole bunch of S&P target date ones that became zombies, etc. So again, why are they bad? Well, they have a small assets under management. They're actively traded. Shallow pocket might occur. High trading fees, high management fees. fund managers might be compelled to concentrate their capital in their highest conviction stocks to get a higher ROI. So they're going to incur more risk to investors. So again, higher risk as well as the risk of potentially becoming a zombie and being delisted. The opportunity cost, if you're in one of these, essentially it's dead money. If investors got in during an ETF IPO, it could take 1 to 5 years before they are convinced that it's a bad investment. And again, it's dead money. That capital could have been deployed elsewhere to generate a better return on your investment. So myths about zombie ETFs has low liquidity. So that depends on the underlying assets and not on the ETF's trading share volume. Investors will lose all their initial investment. It depends on the stocks ETF's holding. But if a zombie ETF does get delisted, its assets under management get sold off and the capital gets distributed back to the investors. So you will get at least a portion of your capital back when it gets delisted and liquidated. So what are some other ways to spot a zombie ETF so you can beware of zombie ETFs? Well, here's another good article by wealthmanagement.com. Again, I'll leave the direct link to this article in the description box below so you can read it in more detail at your leisure. So they talk about some other factors of how to spot a zombie ETF. So they did some analysis on the history over the past 5 years of ETFs, and they found that nearly a quarter of the ETFs that existed 5 years ago have closed down. So they were zombies and got closed down, a significant portion of the ETF universe. So they talk about that it existed as of 2014 through 2019. So the top predictor of closures is assets under management. So again, we talked about kind of a $50 million threshold as a potential indicator of a potential zombie ETF. So ETFs that closed had a median assets of 10 million. 89% of shuttered funds never crossed the $100 million mark. Which many believe to be the threshold. So they're purporting a threshold of 100 million. So there's a whole range of ETFs that started out small, never got their traction to cross 100 million. So again, you can determine where your threshold is: 50 million assets under management or 100 million. Again, ways to beware of and avoid potential zombie ETFs. Brokerage firms not allow investors to buy an ETF that has too little assets under management. So again, institutions won't be interested in them if they're too small. One of the reasons they don't want to deal with the headaches of a closure. So again, if it gets closed, there's tax implications, potential losses. So it's a circular problem. To gather assets initially out of the gate, you're subject to be closed. If you can't get assets out of the gate, you can't get distribution, and therefore you can't grow, and eventually they become zombies and die and get liquidated. So assets aside, of the nearly 400 funds that closed over the past 5 years, more than a third were ETNs, exchange-traded notes. So again, exchange-traded notes or ETNs have a higher probability or a significant probability of being a zombie and therefore getting closed. They're linked to debt securities. Most ETNs fail to gain traction because they must take on the credit risk of the issuer with their products. So ETNs are specialized in investor objectives. Top 10 closures were either ETNs or targeted maturity products that had a fixed maturity date. So again, a couple things to potentially watch out for. ETNs had a high probability of closure, being zombies, and also target maturity dates. So further, many ETFs that were shut down were highly specialized international funds. So again, things to watch out for. If an international fund is too specialized, that may be an indication. So here's an Eastern Europe, Asian local debt, Chinese yuan, dim sum, bond fund. Fund closure may cause a taxable event. because they're forced to sell out of an ETF when they weren't intending to, so the tax efficiency benefits of the ETF disappear. So here they give their statistics over their 5 years. You can see, the percent that rapidly grow, slow decline, rapid decline, and then 24% close. So then we've got, some, slowly are dying, and then 24% closed. So it's a little surprising that Vanguard and BlackRock dominated over the years. State Street, 33% of ETFs that existed in December 2014 experienced rapid growth, 20% annual growth, and 24% closed. Vanguard had 70% of its ETFs experiencing rapid growth, so only 1% slow decline and 0 closures. So again, another indication, a positive indication, is obviously the Vanguard ETFs are at lower risk of being zombies and therefore being closed. So we hope these factors all help you be able to spot a zombie ETF, so you can be aware of zombie ETFs, avoid zombie ETFs. So we hope in this short video we've helped you understand what a zombie ETF is, how they're defined, how you can spot potential zombie ETFs and therefore beware of zombie ETFs. And again, some of the criteria you may use to spot potential zombie ETFs and therefore beware of zombie ETFs, not get stuck with dead money or get less than you expect when they liquidate a zombie ETF, and a potential negative tax implications, again, if a zombie ETF gets liquidated. So again, hopefully all of this will help you beware of zombie ETFs and therefore avoid getting stuck with dead money in zombie ETFs, or again, getting hit with a tax bill or a loss that you didn't expect. So again, let us know what you think of all of this. What do you think of this discussion and information about zombie ETFs? Do you know of other ways, good criteria to spot zombie ETFs to avoid getting stuck with dead money or a negative tax implication due to a zombie ETF? Again, what did you think of all this? Let us know in the comments below, in our Discord, in our Facebook group, via social media. You can find the links to our Discord, Facebook group, social media, etc. in the description box below, also on our homepage, beachbumtrading.com, bum without the U. And again, let us know what you think of all of this, other ways that you know of to spot zombie ETFs, to avoid, beware of zombie ETFs. And again, we hope this all helps, and good luck, and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the links section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the beach bum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow beach bum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.